Turning our attention now over to the markets. This week we're taking a look back to our recent trip out to Kansas City and the NAFB Convention. There we caught up with Agricultural Economic Insights Managing Partner David Widmar to discuss what producers should be paying attention to in 2023. We're going to talk about considerations for 2023 with David Widmar of Agricultural Economic Insights, or AEI. David, we appreciate the time today.
Great to join you. Thanks for chatting.
Well, 2023, if it's anything like 2022, we'll have a lot of surprises that pop up. But as we look at the year ahead, what are some of the trends you're seeing?
Well, I think the first one that you already mentioned is we need to expect a wide range of possible outcomes. There are just periods of history, and we're living in one of those, for better or for worse, where just the range of, again, as I said earlier, the range of possible outcomes is very wide. It's kind of human nature to think like, oh, this will never happen, and then we're surprised when it does. So encouraging producers to just stop and say, what's the range of commodity prices that I'm expecting? Well, let's spread that out just a little bit, because my bias is going to be to keep that tight. So to answer your question, first thing is stocks are tight. They're going to continue to be tight. Maybe they'll begin to recover in 2023, but we're going into this year with tight stocks. I think that's the most important story for U.S. producers. It's tight for grain in the U.S., also globally, but we also see tight conditions in meat inventories. And so when we have a supply shock, maybe it's a drought or maybe even the situation we had a year ago in Ukraine and Russia, that's what makes the markets really jittery. So the backdrop, tight stocks, and we'll see if we get some rebuilding here, or if it threatens to get tighter, commodity markets will get dynamic.
Usually tight stocks mean good prices for producers. We will see what happens on that front. The interesting thing, and a lot of people want to talk about the input prices right now and whether you should try to lock them all in now, or if for some reason they might go down. Do you see in your crystal ball the chance of those going down, or where we're at right now might be to stay?
So the first thing to keep in mind is fertilizer prices are down from where they were. Nitrogen especially is down from where it was this past spring. But if you bought fertilizer a year ago and you're pricing it today, you're going to see some sticker shock. It's still higher. So this relative question is always changing. We're encouraging producers to think about strategies that allow them to make some progress. So you don't sell your corn crop generally all in one day. So it also makes sense to not buy all your fertilizer on one day. So can you layer those purchases? Can you start to firm up the uncertainty around what your costs of production are going to be, but still keep your options open down the road?
What I want to ask you about, it seems like as we look over the past few years, there's always something that comes up in the cattle market. There was black swan events, we're labeling them. How does a producer protect themselves from those unknown things that we might encounter in 2023?
Well, I have the minority opinion that I'm not sure there's many black swans out there is what we need. Black swans are kind of a very specific thing, and we kind of typically use that with, I didn't think that was going to happen. Just because you don't anticipate something in your narrow range of possible outcomes doesn't necessarily mean it's a black swan. But the management lesson here, the management implication is really important. You need to build in contingencies for these unknown unknowns. Just because we have crop insurance and we signed up for ARC and PLC doesn't mean that our risk management plan is complete, it's robust. And again, we have high production costs, we have profitability, but we have uncertainty abound. And so that's a recipe for how do we make sure we have enough working capital? How do we make sure our balance sheets are in good place? How do we make sure that we have plans and goals that allow us to improve our operation down the road?
Tell me more about AEI and the services you guys provide.
So we focus on content, so articles. We have a podcast series that's topical, but we're trying to help decision makers in agriculture, both producers and those who sit across the desk from producers, make better decisions. And we think we can do that. We deliver that by providing data-driven insights. So if we're talking about interest rates or farmland values or commodity prices, we typically show decades worth of data to really provide a lot of context and history. We also provide a lot of frameworks and mental models to help navigate the uncertainty. So we don't have a crystal ball, but we're going to help you peer into your own crystal ball. We're going to make you your own guru and help you think about the uncertainty, because ultimately the decision maker has to make the decision, and we're just trying to give them a slight advantage so they can feel more confident and they can make that decision for the operation.
David, we appreciate the time.
Great chatting with you.